and go.
Hi, everybody. Today is going to be a great day for you to be watching. I have David Hunter with us, Dave H. Contrarian. And Dave, great to have you back. Here's the S&P chart. And why don't we start off with the trend line, the downtrend line that the whole cosmos is watching right now.
Yeah, hi, Dale. Thanks for having me back.
Yeah, great to have you here.
Yeah, I think, I have said on Twitter, it seems like everybody's watching
This trend,
the 200-day and the trend line and thinking that that's going to turn the market, and we're going much lower. In other words, 3,000 or below.
Right.
And I've said you could get a pause there, but given that so many people are using that as their measure, it probably pushes through there, maybe to 4,300 or somewhere. In looking at it though, of late, I have a feeling instead of pushing up to it and going through it, I think yesterday may have been the beginning of a turn here. I don't think we're going to new lows, and I'm quite sure we're not, but I do think we've got room here for a week or two of weakness.
3650, Dave, could it be that deep?
I'm looking at 3,800.
Okay.
It could certainly go lower than that. I definitely don't think I certainly don't think we're going to new lows. But I think there's a gap at 3,800, so that makes sense. And in looking at a lot of other groups and stocks, that's where I started saying, yeah, this looks real. I think, the industrials look like they can be hit. XLI looks like it could be hit pretty hard.
Yeah.
It's had a great run. That's the thing. We've had a great run in the market, 15%. We've had a even bigger run in some of the Dow groups like the industrials, and I think we are going to get a correction here. And then what I think it is a combination. Obviously, China's there. It's, as you well know, this is a seasonal time. You get the strength into Thanksgiving, then you get a week or two of weakness. So that fits. I'm still thinking we're going to have a very strong year end, but I think we could have a week or two here where we get hit. And as you're seeing, you get a day like yesterday and people come out of the woodwork saying, okay, it's over, we're going to 3,000, here we go. And as a bull out there, as the bull out there, I get beat up on days like that, or I get a lot more activity from the bears. But I think this is just another correction in what I call the stair step higher. You come out of that and then you move up to probably 4,300, and from there to 4,600, and that's where I think we got to take a look and see whether you're going to push through that or have a more sustainable pause before you push higher.
Okay. Pretty good roadmap. In fact, let me try and be a mind reader. This is what I saw on Friday, and I go, wow, it sure makes me nervous to see this type of extreme complacency with 20 VIX. You probably looked at it, thought the same.
Yeah, certainly. You've got, again, we had a great rally from October 13th, and yet, you look and a lot of people who were bearish have, at least as from a trading standpoint, become bullish. So, it's maybe time to take the other side for a little bit.
Dave, I know I want to move on to other asset classes, and I know you're going to probably disagree with me, but I think that what would catch the market offsides for a week or two would be if these aren't the highs at 420 and we get some type of spike up here to challenge 435. Was that the high in the 10-year? Do you think that that's possible? Because it's a pretty unanimous thing that yields have peaked and inflation has peaked, but maybe there's one more surprise here.
Yeah, I actually see in the 10-year, I see 4%. So we're at, we came down 65 basis points here, and it wouldn't surprise me to go back to 4. In fact, that's what I'd expect in the next couple of weeks. And then I think we're on our way to 250.
Okay. All
So
right. So maybe that happens into the Fed, that you get a rally into the Fed. What are they going to do, Dave? A half?
yeah, I think actually it's even more than the Fed. It's amazing to me that the market still falls for it. But I think probably the most obvious thing that we've seen this year, and certainly in the last many months, is you can basically be a mind reader of Jay Powell. He wants the market lower. He
Yes.
he he and Dudley think there is no way they can be done until the market's below 3,000. There is no doubt in my mind that that is stuck in his head and he can't get away from that. And I think it's a huge mistake, but I think that's where we're at. And he sends out his minions. Yesterday it was Bullock. Oh, the market's underestimating how much we're going to tighten.
Mhm.
So I don't even think it's the Fed meeting. Powell speaks this week, and I can almost guarantee you he's going to be, coming out as hawkish as he can be, or saying things that will, get the market to understand that he wants this. He's not anywhere near done tightening. That's that's all jawboning. I mean, I
Yeah.
don't know how far they have to go here, and I don't know whether he's going to make an even more egregious error than I think he is, but for sure he wants the market lower, and that's what
So
he's.
then if the market is, so then if the market is, has bottom and he wants the market lower, doesn't the strength in the market give him cover to continue to raise rates?
Yeah, as I've said for a few months, or certainly last couple of months, I don't think the Fed fund rate is that important at this point. It is important because it indicates Fed's continuing to tighten into an already very tight situation. So I don't mean it's not important that way. But from a market standpoint, if the 10-year, and again, I'm not talking about the next 2 weeks because I think 10-year is going to confirm more tightening. But after that, if the 10-year begins moving down pretty aggressively, um, either the Fed can stick stubbornly to their path and it won't matter, or the Fed's going to have to join the 10-year and say, okay, enough is enough for now. I think either way, I think by the time we get into the early part of next year, Paul's going to find out he doesn't control the market. The market's going to be doing opposite of what he wants. And part of it is going to be because the bond market's going to be doing opposite of what he expects. So, meaning rates are going to be coming down. But
Right.
again, what I can't predict is what a human being is going to do in terms of how big an error he's going to make. Jay Powell has bought 100% hook, line, and sinker into Bill Dudley's view. I think it's the stupidest view you can have right now. The market is not something the Fed should be trying to target. I understand the concept of they think you have to get the market down to tighten conditions because the wealth effect allows people to go outside. There's so much else going on in the economy and in people's finances. It's not the wealth effect that's what they should be focused on. And again, it's not just the United States. Globally, there is trouble out there, and it's because of Jay Powell. I mean, the other banks are doing some of the same damage, but Jay Powell is so wrongheaded right now. But that doesn't mean he's going to stop.
And you know what I see in certain agricultural markets, Dave? The Fed can't print food. So
Yeah,
I think you still have bull markets. Beans are breaking out now, Dave. It's not just the war in Ukraine. Production's been shaved everywhere.
yeah. I'm not sure. I know you made that comment our last time we talked, a month ago or whenever. When I look at wheat, when I look at corn, I'm not so sure they're in their strong moves anymore. They may be, but I think the jury's
Well, I'm
out.
talking beans, and there's the
Okay, yeah,
chart.
yeah. I didn't look at beans, but
Yeah, that
certainly corn and wheat look to me deflationary, not inflationary at this point, and that's in spite of all the stuff going on in Ukraine. So, yeah, I am not
wheat
sure
looks the
that.
weakest.
Yeah,
Yeah.
so
Okay.
I think ag is going to join a lot of other things in the deflationary side, and
Okay.
you know
They're done.
yeah, I think so. We had the inflation scare. Ag helped it because it went right with the others, but look at lumber. Lumber can't get out of its own way. I thought it would bottom at 500 and run back to 1,000, and so far it's getting weaker, and we know why. Obviously, housing's a real trouble spot. I continue with my scenario, or my forecast, which is we're heading for a global bust. We're
Right.
seeing the central banks, and particularly the Fed, make probably the biggest mistake that's been made since the 1930s in terms of Fed policy. And they don't know it yet, and they're continuing stubbornly to go even tighter. But look at, the inverted yield curve should tell them something, but they don't think that's important right now. They're focused on the stock market.
Yeah. So they're sowing the seeds, regardless of a melt up in the market or not. They are sowing the seeds for 6 to 12 months down the road of big problems.
Yes, and we had the Black Friday, Black Monday, and we get the typical numbers out after that, preliminary numbers, and they're positive. But when
Yeah.
in nominal terms, but when you factor in the inflation,
Well,
um,
that's why they look higher.
I think you've got a weak Christmas season. So yes, third and fourth quarter may be positive, but I think everything going forward is not looking good. Housing can really get hit. Consumer sentiment tells you ahead that there's real trouble brewing. Industrial, et cetera, I think is in trouble. So I think the economy is a lot weaker than the Fed understands. They're still thinking they're engineering a soft landing. And like you say, 6 to 9 months from now, I think we're in a downturn worse than 2008-9.
And the dollar will be part of it, will weaken along with the economic weakness coming into the US because of Fed hikes, that we could have a big bear market in the dollar here. You
So I
think
think the
this is a
dollar,
high?
I think, I'm sounding like a trader today, but I think the dollar can maybe bounce to 109.
Yeah.
I can go back to 109. And then I think it, heads towards par. And then from there, more weakness. And ultimately, I think you can get back into the 80s.
Okay.
So
What,
there's
you have a target in euro?
euro. My target had been 130. I kind of
Okay.
took my targets off because the market was going so far against me, and it was too far away for anybody to believe me.
Yeah.
But I still think 130 is possible.
Okay. Is that, but you think, do you have a favorite currency? Could it be commodity currencies you would favor more than the euro?
Yeah, a CAD to me looks like it can get up maybe to 95, certainly to 90.
Yeah.
And the Aussie, I think, can probably get up to 85. So those are
That's a
nice
big
runs.
move.
Yeah.
Yeah, that's a big move from here. And also, gold and silver are cooperating with your call
Yeah,
last time you were on. We were here. So you said gold at bottom,
yep.
silver
Yeah,
at
I still
bottom.
believe they've bottomed. I do think that there's gaps that could be filled in this next 2 week weakness.
Okay.
So yeah, I wouldn't be surprised. And I'm looking at more the miners than the metals, but
Yeah.
I think you can get, silver back towards 20 and a half, somewhere in there. So not huge decline, but you can get it back. Um, gold, gold looks like, I'm not sure where gold, I'm not sure where the low is, but it's not that far down. And I do think the next move out of this next couple week correction takes you to 1900 and then on up from there.
Yeah, the miners look good. This is I awarded this chart candle of the month.
Yep. Yep.
Newmont, right?
Yep.
So it
Yeah,
will
I
make
do.
a new low. The lows,
Yeah. No,
don't you think?
I think you could see it. This next couple of weeks, I think, is going to be a head fake for people. They're going to get
Yeah.
negative again. But I can tell you what comes out after this next couple of weeks, I think is really a big move. I mean, I
You know
think,
what? I interrupted you, Dave, but this is really what you're talking about right now. This is the last bus stop where you're going to see these levels for quite some time.
yep.
And it's time to back up the truck and have your shopping list ready now so that during this correction, you're getting better levels.
Yeah, I think commodities of all kinds and precious metals certainly are going to get hit here for a week or two. But from
Yeah.
there, I think copper looks great. I think silver looks great. I think gold looks great. So, message is just be careful. The next couple of weeks could cause you to get bearish when you shouldn't.
Okay. And I was wondering if you still think the Russell will be one of the leaders coming out of here.
Yes, I do, definitely.
Okay.
So again, if the S&P can go back to 3,800, you could certainly see, an 8 or 10% pullback in the Russell. So don't be surprised if it's weak for a couple weeks here. But I do think, yeah, it will be one of the leaders. I still have a 3,000 target on the Russell for the melt up.
Okay. And something that people probably don't bring up anymore, and you were pretty spot on about this failing rally up here in WTI.
Yeah.
What do you think now from these levels?
Yeah, there's a possibility, and I only list as a possibility. If you put out a 1-year chart, there's a possibility that you could see one last rally to 100 or 105 because it's so oversold. But it's either going to have that one last bounce quickly, and either way, I think it goes to the low 60s from there. So it may go straight to the 60s, or it may, bounce up in the 9,500, 105 area before it rolls over. I will say this: I think the XLE, the oil stocks,
Yeah,
it's a massive head and shoulder top. I think it's the group I see that I'm most bearish about. And you look on a 20-year chart, and some people don't believe in these, but there's a massive right shoulder. And I think XLE can go to 20.
okay. So regardless of a bear market rally, and I was
Well,
it's
let me
amazing.
back up because I'm using different time frames. That target of 20 or possibility of 20 on XLE, that's during the 80% bear market after the melt up. But I do think it's topped on, it's a right shoulder top here. So it's not going to go straight to 20 here, but I do think there's there's a head and shoulder top. There's a little upside from here and a whole lot of downside over the next year.
Yeah. Okay.
And as you know, even though it's not, it was in a bear market for a long time. In the last year, it's the favorite group of the institutions. So it's pretty heavily owned in institutional portfolios right now.
I was surprised, Dave, how well it held up with the decline in crude. The XLE almost looked like a different chart moving in a different direction. You think that could be a foreshadowing of what's going to happen to miners? Is that once we get prices up well above production costs, that even if gold or silver were coming back down, that the market will view them as money printers and they'll hold up better?
I doubt it, only because I think once you get into that 80% bear market, they will come out of the bear faster. But I got to believe they're going to get hit. It's still a group that speculations, is a big part of. So I think once things roll over, they're going to get hit too.
Okay.
I might be wrong, but I'd be careful with miners. I think once we have the run, but keep in mind, I'm looking for, GDXJ to go from, we're 34 to go to 100 plus, GDX to go to 65.
In what, 6 months, Dave? I mean, is this going to keep running after the bull market in stocks?
I think they probably go a few months after the top in stocks, but I don't know whether it's 6 months or 9 months. I think it's going to be a very sharp rally. And so when you have that kind of move, you've got to have a correction after that of pretty good size. So
okay. All right. So let me ask you, and you're probably not there yet, but let's start talking about it, because look how fast a year flies by, right? And this is going to be a pretty critical year on for the wave up, and for looking for signs besides a number. What will you be looking for when you think that we're completing, besides the S&Ps reaching your target?
Yeah, for sure. And I still think my target's going to prove conservative. So as much as I'm not high on the street at 6,000, and I guess Bank of America came out with a 6,000 target today.
Oh, now you have to be contrarian of that.
Well, wait, but their target's for 2032. So
Oh my God. Who are they? Nostradamus? Well, they're
uh,
giving themselves plenty of time to be right. Anyway.
yeah, so 6,000 for me is obviously first half 2023.
Yeah.
Um, I'm the thing that's gonna have me concerned is when you see that sentiment move straight up. When you finally have everybody all in and bullish, that's what I expect to see at the top. So
Yeah.
yeah, I think as we approach 6,000, that's where you're gonna be.
Okay. Dave, I wish you and your family a very happy holiday season.
Yeah,
I root for you. Your narratives have helped me. And
well, you
we're
must be
none of,
the only one.
well, we all have narratives, okay? And some of your narratives have given me conviction. And I'm sure that it's that way for other people. And there's times when I'm wrong. It doesn't mean that you're wrong. It just means that the art of it, the when you were wrong. People
Yeah,
don't understand that.
the hardest part for people is I'm not a trader, even though I'm giving you some
Yeah,
shorter stuff here.
yeah,
I'm not a trader. That's not what I do really. These setups can work or don't work. They don't always
yeah,
work. My conviction is in my forecast of, this final run to a 40-year secular top, followed by an 80% bear and the global bust. That's the forecast. What happens in the meantime, if I've said over and over on Twitter, option traders should probably not follow me or certainly shouldn't trade off what I say because, my stuff is not really geared to any kind of precise timing. It's, these are big cycle moves.
yeah. They're historic.
Yep.
So here we are being able to trade history. Thank you for edifying as many people as you do, David. I'm a fan. I root for you all the time.
Hey, thanks, Dale. I'm always glad to come on.
All right, David Hunter, everyone, follow him on Twitter at Dave H. Contrarian. Today, the H stands for happiness. Let's be happy. Let's be happy the rest of the year. What do you think?
Hey, that sounds good. Hey, Merry Christmas, Dale.